Good afternoon, everybody, and welcome to the show. Weird technical problem going on right now. My camera seems to be stuck in a zoomed out position. So you're seeing a lot more. You're seeing a lot more than you normally get to see. So what can I say? What can I say? Holy cow. Normally, I got a little zoom thing up top and I can control the camera with it. And it's just gone. I've spent about 15 minutes trying to figure it out, and I have come up with nothing. So, well, nothing we can do. You're getting an extra view. You can see some lights. You can see a little banana over there in the corner. Yeah. You can even see the edge of my coffee cup. I think it's there. Yeah, right there, at the very edge of the screen. Here, I'll pull it a little closer. Coffee cup. So, oh boy, I will tell you right now, this is annoying me big time. But nonetheless, you know what? When it comes to shows and entertainment and all that fun stuff, they always say the show must go on. So, yep, the show will definitely go on. And of course, the day that this happens, there's no cat in the tower. So what can I say? Anyway, welcome to a green day. If you can see the green sign all the way back there now, it's looking pretty small. Looking pretty small for sure. Oh boy. I still don't like this. I don't like this, guys. I'm uncomfortable, but that's fine. So today we did have a green market, as I mentioned before, and you know what? I did not, let me just pull this over here. I did not pull up the screen yet, and I'm going to do that right now just for the simple reason that I was busy trying to fix. The issue that we had here. There we go. And let's bring this on up, and oops, better get off of that. All right, we'll get over here to the market. So as I mentioned, we are definitely having a green day here in the Canada. So we got the TSX being currently up 0.54%. So that's not too shabby. Of course, oil is starting to, come back a little bit, and that's certainly helping. And we'll talk a little more about that. And I know yesterday we looked at that graphic. Fantastic graphic. Well, it's not a fantastic graphic. It's a map. It's a little map that I drew on the whiteboard. But we were looking at the movement of the pipelines, and you know, I did a bit more research on it, and holy banana bread, it's really, really, really tough. In fact, if you wanted to be pumping oil from the Gulf of Mexico all the way up to the rest of the continental United States, you pretty much would almost have to build a new system. Because there's areas, like for example, where the pipelines go downhill. Guess what's powering a lot of that movement of the oil in those pipes? Gravity. So just in areas like that, if you tried to retool it to put the oil back in the other direction, you've got places you're going to need pumps that don't have pumps. All of the reservoirs are all in the wrong end. It would pretty much, they would pretty much need to build a new one. So for that very reason, our oil is perfectly safe. Definitely safe for sure. So what can I say? So looking at that market today, like I said, nice green day here in Canada, seeing a little bit of recovery rate across the board. MDA Space, guys. Oh, let me show you this. MDA Space had a really good day. All right. Oh, this is MDA Space we were looking at. Whoops. But look at this. Look at this big jump here. So they actually got a defense contract from the U.S. today. And the news of that has certainly pushed them up pretty big time, All right, there we go. Here's the real TSX, guys. So it's nonetheless still a green day, and we're well above that blue line. That blue line is basically where we divide. a red month from a green month, and we are on the green side, and we're doing good. We're doing good so far. Better than I was expecting, to be honest. All right, looking south of the border, the TSX, the S&P 500 also in the green, but not by much. They're only up 0.07, but they have been having a good month thus far. They're well in the green for the month. The Nasdaq not so great. The Nasdaq down 0.74 today, and they are actually on the wrong side of the blue line. So the Nasdaq currently is sitting at on a red month for the moment. Dow Jones Industrial pretty strong today, up 0.62, and the winner of the day, really, once again, the Russell. So the small caps just doing really well today, up 1.15%. Now, some of the goodness that we've had is gold. Gold is one of those rebounds that's certainly helping the TSX. Although, interestingly enough, silver is down 1.74. Copper also down 1.28. It's just gold. Gold's doing good. So it makes me think it's more or less people, there might be some people moving a few things into gold. A few people still kind of nervous with all of the geopolitical stuff that has been happening lately, for sure. All right, crypto, yeah, not so well. Crypto was in the red, although here's the oil part I was talking about. So we're getting some pretty good rebound on oil today. Oil overall up 3.96%. So what can I say? That's pretty good, pretty good. All right, heading into the heat map. And I got to get rid of the side thing. And I'm just going to give this a good old refresh as well, guys, because like I said, I was fighting with the camera. And I'm still sitting here going, where is my thing? Uh-oh. Uh-oh. Just a second, guys. I think it finally just showed up. I think. No, never mind. That is just the sharing thing. I thought I had my control back, but I don't. Oh well. What can I say? All right, looking at the heat map, the banks doing much better today. Pretty much, as far as I can see, I think they're all up, other than National Bank. National Bank is still in the red, down almost 1% today. But Scotiabank looks to be one of the bigger winners, up 1.12, as well as BMO up 1.13. So looking pretty good over there. Energy, of course, doing really well with oil rebounding. We've got Canadian Natural Resources up a good 3.23%. Imperial Oil, Cenovus, Suncor, they're doing well. They're doing well. It's a much better day. Our pipeline's also looking pretty good. Pembina today up 0.67. Railroads have both rebounded well after, well, yesterday, gosh, they went down pretty deep. But look at this, CNR up 2.66, CP up 2. All right, going south of the border, and I'll refresh this so that we can actually see something. As you can see, a lot more red on that side of the border. So obviously tech, with the Nasdaq being down, we know tech is going to certainly be going to be in the red. So Nvidia down 2.04, Apple down 0.66, Microsoft down. Google though is doing okay. They are up a full percent, and Tesla's also having a better day, up 0.94%. And guys, let's head over here to crypto, and I'm just going to refresh this. So mostly a bit of red. We can see quite a bit of red here. Bitcoin down, Ethereum, XRP, Solana, Dogecoin. They're all down. Now we do have a tradition here. We like to look at a coin that's doing the opposite of what the market's doing. One of them altcoins, and let's go nice and deep here. We'll grab, let's grab this one here. I don't know what this is. Let's take a look here. It's Fly Trade. What the heck? I don't know what this is, guys. There's about 15,000 altcoins out there. I call them crap coins because honestly, it's like going to the casino and playing a game of craps. You're probably not going to get lucky. The house is probably going to win. So this is Fly Trade. I don't know what it is. Maybe it has something to do with flying. It looks kind of like an airplane. Who knows? Who knows? Nobody knows. If you're interested in something like Fly Trade or any of these altcoins, do a lot of research and then do some more, because there's a lot of rug pulls. There's a lot of danger in there. I like these guys less than I like penny stocks, and I'm not a big fan of penny stocks. So I always say be careful with these. You want to make sure that obviously that the coin makes sense, and that you have faith in it. Otherwise, I would stay away from coins like Fly Trade, because they're a little bit like fly paper. You get stuck and it's just messy. That's all. It ends up being messy, messy, messy. Stick to the big coins. Stick to your Bitcoin, your Ethereum, your XRP, Dogecoin, all of those fun coins. Perhaps not today, though. Perhaps not today. Today, not the best day for that. All right. I'm loving it. All right, guys. Now, let's just get back to this. We'll head back to the big screen. Oh boy, as you guys see much more of the studio than you're supposed to see, but that's fine. All right. Brian was in the house first with a good afternoon, everyone. And Gursky, hello. Happy Green Day. Absolutely. Yeah, definitely a good green day for sure. Oh, by the way, today is Thursday, tomorrow is Friday. So the Financial Express is still alive. So if you guys want a show tomorrow, basically 4 supers or 4 gifted subs or a combination, and we'll have a show tomorrow. And keep in mind, if we go to the 5th, we do have our bonus, I guess I was calling it my New Year's resolution goat, but you guys started calling it the flash dance goat. So we got the flash dance goat. And there's also still a secret goat out there. The only clue to how to hit it is 5, whatever that means. So we'll see. Maybe that goat's going to pop up today. Maybe not. We'll find out. All right. Holy banana bread. I'm just going to move this over a little bit so I can... I had my camera slightly blocking the chat. Brian, just barely into a green day. TFSA is green, but RRSP is red. Still green overall. Well, okay. Well, that's good. And guys, I don't mind. If we have a red day, I'm fine with that. Usually it means better buying opportunities for sure. Brian bought another 9 shares of CPCC with dividends today. Nice. And I think 60 dividends should have been coming out today. So I know I received some. I received my 60 today. I don't know. Did you guys get your 60 on as well? Oh, I'm never going to get tired of having fun with the word 60. I really am not. Crispy Bones is in the house, and we have a hello all. And oh, yeah, we also got a bell coming up today, guys, in about 16 minutes. So I'm going to make sure I don't get distracted. Let's see. Claude says, hello, interesting day. Lots of swings. Ooh, nice. And Scott has arrived on the planet, apparently. Greetings, citizens of Earth. Apparently Claude is not from Earth, but from Quonos. I don't know where Quonos is. I've heard of Quiznos, but I think it's a different place. Abby says, hello all, super lurker here. Glad to make it to a live today. Well, welcome. I'm always happy to see lurkers popping up for sure. Claude says, TIE fighter action, nice, but sadly no cats yet. I know. I'm still sitting here and I'm like, what's going on? Why don't I have my control? Where is my control? I don't know where it is. It's just not there. Mary says, hello all. I probably have to completely reboot the phone, I think, because I think maybe the phone is causing the issue. But, you know, I can't do that now. I'll have to do that for next show. For now, you'll just have to have, I like Claude's TIE fighter action. We'll go with that. Or it might be because there's a TIE fighter in the background. Everything on that shelf, by the way, that's all Lego. That's all Lego. All right, now back to Mary. Mary, of course, is our official captain of the like button. So guys, if you have not hit that like button, today's the day to do it, for sure. Especially with me having technical visual difficulties, because it'll make me feel a little better. I'll have my coffee while you guys are, now you guys get to see way too much. Like, it's like, I'm conscientious here. It is good coffee, though. There we go. I'm trying to push it to the side. Now, all right, I'll leave it there so you can see a little bit of it. You can almost see the bell. Actually, if I pull the bell closer, can I get it so you can see the bell? No, I guess not. I guess the bell's just not high enough. All right. Gursky says, I'm up 15% today. Rob says, in your portfolio, do you only do stocks and ETFs, no mutual funds? I'm not a fan of mutual funds. I will tell you that right now. For the most part, and I'm not going to say all because it's not true, but for the most part, most mutual funds tend to be fee traps compared to ETFs. So I find ETFs just to be much more efficient. You're getting more of the return than the management company running it. So I'm very leery of mutual funds. Now, with that being said, there are some mutual funds that do have lower fees out there, for sure. So if you are using mutual funds, make sure you're aware of the fee structure, and then take a look at what's available in ETFs, and you might be like, gosh, I really should make that change. So yeah, definitely ETFs over mutual funds. All right, now wait, here's a question though. Rob, are you in Canada or are you in the United States? Because I'm speaking from Canadian experience. I don't know the difference in the United States. How much? I mean, I still assume it'll apply to the United States, but I'm not sure of the fee structure of mutual funds versus ETFs in the United States, and I kind of should look that up. I really should. Azenial is in the house. Good afternoon. Tech semiconductors in the red big time. Yeah, tech's not having a great day, but they'll rebound. Hopefully tomorrow. Be great to see. Be great to see the tech back in the green on tomorrow, on Friday. Oh, and guys, we got a new video coming out tomorrow. I'm very excited about this one. So it's one of my my growth income videos, and I think this one's pretty fantastic. I think it's got a bit of stuff in it for everybody. Maybe it's not super exciting if you're a full-on dividend growth investor. So, but it is pretty darn good. Those of you who are channel members, you could have already seen it, or you can see it later today after the show. Elaine says, let's see here. Hey all, today was my dividend day. Great shot of dopamine. Yeah, absolutely. Absolutely. It is very fun to get dividends. No ands, ifs, or buts about it. All right. Lisa's in the house with a good afternoon, everyone. Scott says, I bought groceries with my dividends today. Afternoon, EIT 15. Ooh. Ooh, $15.99. All right. We're heading over to EIT. We're heading over because if they're gonna hit 16, I want to see it. Oh, let's actually head over here. All right, EIT. So this is good old Canoe. There we go. $15.99. Look at this. Now, I'm kind of curious. Let me just take a gander here. Ooh, they actually did at one point. Look at this. Their high on the day is 1601. So, yes, so EIT did hit 16 today. That's pretty darn cool. Meowie Kitchen. That's an interesting camera angle. Can see the light and the cat tower. Yes, the camera is stuck in that position. Normally, I have a control up, basically right up on the top of my main command panel on the top of my screen. It's gone. I don't know where it's gone. I quite literally spent most of my getting ready for the show time looking for it, because I was just like, I may have also said a few profanities while I was looking for it, because I was just like, no. Because I like to have that control. But like I said earlier, technical difficulties and all, if you guys can see me and you can hear me, the show must go on. And of course, there's the Nightbot just talking about our Financial Express, which is still active for sure. Luke says, hello all. Lovely winter day here in Victoria, 9 degrees and sunny. I was out pruning my raspberry bushes as they are starting to put on green shoots. Oh, nice. Gotta love raspberries. Believe it or not, here in Ottawa tomorrow, we are scheduled to get to 7 degrees, but it's going to be raining, so it won't be the best day. Doorpat says, hello, everyone. Happy reddish day. Well, it's still technically green, though. It's still technically green. Wait a minute. Where did my... oh, I lost my screen. How did that happen? I don't know. I'm going to reshare it here. There we go. Bang, boom, share. There we go. It's back. Somehow the screen went. I just noticed that was just a little circle in an ocean of green. What can I say? All right. Samantha says, I'm here for the goats and winter and, of course, all the great information. Welcome, Samantha. We haven't seen any goats yet, but the stream is still early. Rory says, I see TIE fighters and AT-AT Walker, but no rubber chickens. There's no rubber chickens in the room. There's no rubber chickens in the room at all. But what can I say? Claude says, thinking about beginning a trade with Broadcom CDR, so 1285 today, but not sure if it's a good entry point or if it will fall further. Okay. So Broadcom, let's actually go at what time? Oh, I got to check the time. All right, we got 7 minutes. Now, I'm just going to pull up Broadcom. Here we go, AVGO. I'm just going to grab the real one because you can use the real Broadcom when you're playing with the CDR for Broadcom. All right, and we're looking at it right here. I'm just going to pull it in a little bit here, take a look and see what we got going here. All right, so right now we do have a little bit of movement to the downside. Now, here's the nice thing. And actually, you know what, Scott, I just need to, I need to collapse it even more. All right, so I'm going to bring in a line here. All right, so what we're looking for is we're looking for some support levels. Support levels are kind of where it has, you notice here how it hits. In this case here, I'm going to pull it over. So from this perspective, we're kind of sitting at about here. So we have some evidence of support in this area. I'm going to drag this back a little further. So yeah, this is an area of support, and I'm actually going to bring it to about here. It's actually more about here. So we're definitely within. You know how yesterday we were looking at the standard deviation? This is a support level in this area, this vicinity. So if you're looking to make a swing trade, this is not a bad spot at all. In fact, I just might join you tomorrow on that one because this is a good one. Yeah, I do think we'll see. I think there's a good chance we can see a rebound here. Would I expect it to go all the way back up here? Now, mind you, once again, we're using the bigger ones, so the prices are higher, but not necessarily. I probably wouldn't play it all the way back here. If I was going to, once again, if I was going to play it anywhere, I would be looking probably in this area. Whoops. I would probably be looking in this area if I was looking for a longer term. But honestly, right now I don't have a clear channel because you could also argue that, you know what, it's starting to get into a bit of a channel about here. So you might want to play it, maybe up to here, and you would do this, of course, on the CDR to get your exact pricing levels. But that might be something that I would look at doing. But yeah, I do think that they could be ripe for a swing trade. So I can see some arguments, but as usual, Claude, do your own due diligence and decide if that's going to be something that you want to do or if that's something that's right for you, of course. Night Vampire says, eBank has been good over the last year. eBank has been fantastic. There, let's pull this up here. EBNK. So this is your Evolve European Banks. So what can I say? Here's the last year. And look at this. It's gone from 1130. Well, here, let's get the exact number. It opened at 1129 1 year ago, and it's sitting right now at 1597. So this has absolutely been a nice trek. It's been a nice trek up for eBank. I do like this one. Now, it will have a smaller volume than something like Bank, for example, for the simple reason that it's more niche, because you are talking about European banks. And a lot of Canadians aren't thinking about European banks. But European banks did really well last year. This is and this ETF, yeah, this ETF has done fantastic. So I think that's a good choice. I think it's a good choice at all. VTrap, what does that mean? VTrap. I would need to get, I guess I need some reference, because when I first saw VTrap, I instantly thought Venus flytrap. But you know, I mean, there's different types of traps, like in charts. You got bear traps, bull traps, I guess, dead cat bounces, a lot of different things. So I don't know if you're talking in reference to a stock. So that could be a pattern. It could be a pattern, but give me a little more information, and then we'll go from there. Luke says, I'm up 20% on MDA. Surprised to hear USA is giving defense contracts to a Canadian company. Yeah, well, I was happy. I was happy to see that, because I know when they lost that contract to SpaceX, a lot of people, even in here, a lot of people were like, oh gosh, are they done? Is MDA done now? And it's like, nope. I still have a lot of faith in them. And this is why. They're still a great company. You know, any company, doesn't matter how good you are, you're gonna lose contracts. And you know what? Yeah, of course, investors will not like it, and that may impact your share price. But, you know, the next contract is usually around the corner. So I'm liking this for sure. And Rob is in Canada. All right, awesome. Brian says, just bought another 2 shares of CPCC after getting a dividend notification. That's 11 for the day. Nice. And Luke is having a religious moment with TELUS. TELUS, hallelujah. CCCP, the hammer and the sickle ETF. Oh boy. That's yeah, that's actually kind of funny. Brian says, LOL Rory. Cool. I have 2,000 shares of EIT. Nice. So that's like well, that's like what, $200 a month in dividends. Just bang, reliable dividends. I love it. We just had a background. Whoops. We just had a background screen when you were showing EIT. Oh, really? Okay. Well, let's go back. Let's go back to EIT once again. That is just weird. I don't know what happened. All right. So right now, sitting at $15.99, but right here, you can see this little peak in here. They got up here. Well, that was 1601. Yeah, it looks like, and I'm just checking a couple of these here. Yeah, they hit 16 a few times, but yeah, 1601 was the high. But currently sitting at $15.99. And just going out to the 1 year on this, well, there we are. You can see it's not super great. They had a good time before this. Like, let's go to the 3 year. And you can sort of see. So they slowed down in the last year. But keep in mind, EIT is not, it's not technically a growth fund. It is primarily an income fund. But they do have their good periods of growth, sort of like in here for sure. I like the idea of EIT spending the next year between 16 and 17. That would be fantastic. Rory said, I just started buying EIT 2 months ago, and you like it. Nice. Rob says, what are your thoughts on UMAX, Candace? Low risk? All right, UMAX. Let's pull up good old UMAX here. All right. So UMAX, of course, this is the Hamilton Utilities Yield Maximizer ETF. And I'm going to put it on the 1 year before, I guess I'm not going to. There we are. So here's their 1 year. And this is one thing that concerns me about UMAX. And we've talked about this before. But I'm going to duplicate this tab for one reason. I want to pull up a non-covered call ETF. I'll actually use XUT. There is another utilities one. It's a capped utilities, but let's pull up their 1 year. And all right, so they're going up. This one is going down. So it's one of these things that I don't like. And yes, you know what? They're not holding the same stuff. And I believe UMAX does have exposure to the telecoms, which didn't help. But nonetheless, when I've got a market overall going up, I want to, and if I have something like that is boasting itself to be a utility ETF, I want it to be moving in the same direction as the market. If it's going down and the market's going up, I'm not too happy. And that's kind of what we're seeing here. You're looking at a loss of value as it's been going. So this one, I don't like it. I don't like this one. I would prefer, honestly, if I was looking for an income one, I would go with something like Utes. So if we pull up Utes, and Utes doesn't pull punches. Utes is not designed for growth at all. It's supposed to go sideways. And we pull it up and you look, and yeah, it's pretty much sideways. That's what it does. You get your ups and downs, you get some volatility, but for the most part, you're not really going to make a lot of growth on this. You're going to make minimal growth, but you are getting, in this case here, if you'll take a look, you're getting like a nice 18.67%. So they're very much at the money when it comes to their call writing, meaning that their strike price is the same as what the share price is when they actually write it, so that they can get higher premiums, and that way they can give you more money. So all of that fun stuff. All right. Whew. Uh-oh. Oh my God, guys, I'm late for the bell. This is the first time in 2026 that I've been late for the bell. I got so distracted. So distracted. Oh my gosh. I can't believe I missed it. And quite literally, I heard Jill yelling from downstairs. And she was just going, ring the bell, ring the bell, ring the bell. Oh, guys. Well, the market's closed. The market's closed. What can I say? Oh boy. And I know when I get caught up, we're going to have a whole bunch of people saying, bell, 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 bell. Oh boy. Oh, what can I say? But on the bright side, look at this, guys. I almost missed this. Samantha is in with a super sticker, getting the goats started. So yeah, let's, oh, never mind. I thought for a second the goats were gone, but they're not. All right, here we go. Thank you very much, Samantha. And here is our first goat. And guys, that'll be the goat that gets retired first. So I mentioned the secret goat. We're going to do 4 secret goats that are going to retire the 4 goats that we had for last year. Once they're found, maybe these 4 will be with us all year if nobody finds the goats. But the first secret goat is active, and we're just waiting for, well, it's not active. It needs to be activated, but it's there waiting. It's there waiting for sure. Holy banana bread. All right. And let's see here. Lisa saying 15 degrees Celsius where I'm at tomorrow near Windsor. Oh, wow. That's pretty cool. Winter is in the tunnel. Uh-oh. And I can bring up autumn if people want. Yeah, it's fine. You know what? At this rate here, who knows if I'll have my camera working correctly tomorrow? I don't know. We'll find out. Claude is saying, great, thanks, Candace. I'll probably begin this trade tomorrow. Roku, hi all. Sold a chunk of VFV today with a 45% total return. Part of this year's meltdown. Nice. So I assume you're doing an RRSP meltdown. So pretty darn cool. But what can I say? And yeah, depending on how long you've had VFE, so 45%, that's, you probably had that for quite a while. All right. Rory says, nice jump in XEQT from a few days ago. No. Bell less than 2 minutes alert. Yes, I bopped the bell. I bopped the bell. Let's see. Sorry, Candace, I had heard you wrong. You had said V-trap, not fee-trap. Oh, okay. All right. Oh, I think when we were talking about the altcoin, is that what we were? Yeah, I think so. All right. All right. Rob says SVR shares ETF is down 4 points on the RSI from 70 to 66 today, and you're looking for it to go down to 50. So let's keep holding. Keep holding. Oh no. Here we go. I've reached the point where the bell was missed. The bell must be rung. The bell, I say. Oh no. Game over. I know my New Year's resolution to have the bell rung at the right time every day is broken. 301. Rory, no bell shall toll this day. I love it. And maybe the 5 clue is the number of times Candace will forget the bell. Oh, that would be, you know what? That's actually an interesting thing. So, it unlocks when I've missed the bell 5 times. But now it can't be something, because it can't be something that I do, because then I would know what it is. But that's a good guess. I like it though. Or maybe when the fifth person says bell, bell, hello, McFly. Oh boy. Mark says, I sold all my UMEX months ago and replaced with Utes. It was a good move. Yeah, absolutely. And that's it. I was so locked into that. I was so locked in. What can I say? Larry, so Bayer up from $5 to 11.48. I expect 14 to 17 by the summer. Nice. That's not too shabby. So we win. So much my people get tired of winning. I don't know. Can you really? I mean, guys, can you get tired of winning? I don't know. I don't know about that. I know. Maybe. Okay, maybe from a tax perspective. So please, it's too much taxes. We can't take it anymore. I don't know. I would rather have tons of money and pay higher taxes than have no money and pay no taxes. I mean, I don't know. That's just me. I'm just saying. Rory, if you're invested trading, you're a winner. Larry Supertramp did for Trump. It's called Dreamer. Let's see, calling for a conservative 200 to 300% this year. Brian, he's making America great again. There we go. Poor America. Rob said, did anyone lose money with yield max ETFs last year? I can't see how they continue to operate with the way their ETFs perform. I'm not a fan of yield max. I will say this right away. Obviously, I was intrigued. I was definitely intrigued with them when they first came out, intrigued with the whole idea of synthetic covered calls. But I don't know. If you get that yield that high, to me, it's just, I can't see it being sustainable. And you know what? I definitely did not get on the yield max train. Now, I think I did invest in, I was going to say, no, I think actually I invested in the Harvest version. I was going to say the MicroStrategy one, but no, I think I went with the Harvest one and just did it for a little bit because, basically when Bitcoin was exploding. So, made some good profits on it and left it. And that was actually in the 0 to 100K challenge. So that was a nice little boost. Rory says, I still can't believe Gary Gill and Adrian are so locked into MSTR, MSTE. To each their own. Yeah. Although I will say one thing, guys, MSTE actually had a pretty good day today. Well, here, let me show you. MSTE. They were up today, 4.26%. Oh, everything is small because we zoomed out. We zoomed out for Claude. Let's try to zoom back, get everything big again. There we go. All right, big. Oh, there. There we go. Get our charts all big again. So yeah, they did have a little bit of a better day today. Up. Well, look at this. They're almost back to $5. So, you know, they still got a long way to go. I think a lot of people are still pretty deep in the red, though. All right. Rob wants to know if Mark still has HMAX. And Paul says, I am late, got distracted watching Rudan Brothers YouTube where they do free new gutters, then later they do the roof for free. A metal roof. Okay. Well, that's pretty cool. Let's see. Brian says, apparently anyone outside of the U.S. has a totally different opinion on him. Let's see. Are they in Canada? I could use some free gutters. There you go. They're in Ontario. Yeah, there's like every so often I'll get sucked into a channel that's it's you know, with something silly like there's a channel out there where these guys, they just go around with lawnmowers and they're, I don't know if they're landscapers or what they do in their normal life, but they look for people whose yards are completely overgrown and they just go and they fix it. They fix it all up, cut it all up, tidy everything up. It usually looks really good at the end. Larry said Trump called for defense spending to go from $900 billion to $1.5 trillion for all the ships. Yeah, I heard about that. That's you know, if you're on the fence about whether or not he'll start using the military to do some other things, like maybe you're thinking about, could he even use the military to go after Greenland? I don't know. He's certainly building it up to the point that you know, he could probably do whatever he wants, I think. Apparently Samantha watches the Roof channel as well. Nice, send them over to Calgary. Let's see, I guess the YouTube views pay for it. Okay. Well, why not? If that's your content though, right? You probably just need roofs. You just need roofs so that you can do and demonstrate what it is you're doing. So, you know, in many cases, especially if you've got a lot, like if you're getting 100,000 views every single video, you can probably afford to go to somebody and say, hey, let me just do your roof for free and put it on YouTube. Why not? Scott says, no gutters in Canada. We have eaves troughs. Oh, that's, you know, Scott, I'm from Nova Scotia, and we always called it gutters. We never called it eavesdrops. Yeah, gutters. Brian says, I am just barely up with WiMAX, but it was just lucky when I bought. And let's see, I didn't know how to spell the Canadian name. Red Green Show is still hilarious. Yeah, actually, I've watched a few reactors reacting to Red Green. So, you know, yeah, I mean, some of the handyman stuff is absolutely hilarious. Paul said, so once Trump gets Greenland, okay, yeah, once Trump gets Greenland, Canada is surrounded. Join the USA or Russia, I will take the USA. Well, given those two choices, yeah, absolutely. But can we wait 3 years to join the USA? That's what I would say. It's like, yeah, we'll join you, but in 3 years. In 3 years. Luke says residential REITs are doing better. How is your RMAX holding up? There was a private deal with Minto that fueled some interest. Well, let's take a look at RMAX. I haven't looked at them in a, well, I haven't really looked at them since the beginning of the month. So RMAX. Now, RMAX is 50% Canadian REITs, 50% US REITs. So right now they're sitting at 1635. I'll pull up the 1 year on them. So yeah, they're almost back. Actually, I'm going to pull up their history. So right now, history-wise, they're profitable. They're profitable. Like, they are above where they debuted, basically a little over a year ago. They have a half-decent dividend. So yeah, I'm liking it. Like, RMAX right now is my REIT play. You know, and I'm fine with that. It's doing okay. It's giving me the income, so I'm happy. And I would love to see them get back. Heck, I'd love to see them get back to about 1675-ish. That's my big goal initially. See if they can get up to there. All right. Rory says there's always a Svalbard. Nice. Paul, the last video I was watching was 2.3 million views from 1 year ago. Oh, gosh. Well, that's a lot of money. That's a lot of money for sure. Brian says there is a lawn care guy and a mobile car repair guy that do free work also because of YouTube. Okay, fair enough. You know, maybe that's what I should have done and started doing. No, trust me, you wouldn't want me doing landscaping on your yard. Yeah, I would have to start a channel, what not to do in somebody's yard. And it would be me, you know, going up to somebody's door and saying, hey, would you like some free landscaping? And every video would end with them chasing me off their property with a pitchfork. It would be classic television, but yeah, what can I say? Mark is saying, yes, HMAX is my biggest holdings. 12,580 shares bought in April. So not too shabby. 1438 plus 25,000 gain plus 14K in dividends. Look at that. That's a great amount of dividends. And Mark is over there on Blossom. Definitely. Blossom for sure. Guys, let's just talk a little bit about Blossom here for a moment. Boop, ba-doop, boo. I'm going to put a link down below to Blossom in case you have not tried it yet. All right, so here we go. This is my affiliate link. So when you go to this link, get in there. You should follow me. You really should, because I'll follow you right back. I follow everybody who follows me. But one of the reasons is that if you want me to look at your portfolio on air, I'll certainly do it. On Sundays, on the Sunday show, I don't mind doing a portfolio, but you got to follow me on Blossom and you got to upload your portfolio. So either upload it by connecting your broker, if you have like Wealthsimple, Quest Trade, I think those are the only two Canadian ones, or just manually hook it up. And to me, that's really fantastic because I'll come in. So here, let's just pull up Blossom here for a moment. So here we got, this is Blossom. Now, when I come in here to look, I never go through this feed here. I go, and this is why I always say, guys, follow me, because I go to my follower feed. I want to see the things that you guys are looking at. So I will normally go down through here and I'll go checking around, and if I see one of you guys, especially a regular, I was hoping to see a regular here. I was hoping to see a regular here. So far not. Well, let's see here. There's got to be a regular. Come on, guys. Oh gosh. Oh, this guy here. I think he is probably one of the most active people on the entire network. Bradley Talks Money. He makes a lot of posts. JJ, my mod, who's here sometimes, he has a channel of his own now, so he probably won't be here that much anymore. He talks a lot on here as well. Oh, this person followed me, Eric. And Bill, there we go. See, and that's what I do. I come through here, and I just follow everyone back. And I know where to stop. Oh, well, here's Paul Centauri. He has a channel of his own, and he shows up in here every so often. So yeah, so I tend to go through here, and I like to pull up stuff that other people, that you guys, I like to look at what you guys are writing, and sometimes I'll even reply too. I don't make it sound like sometimes I might give you the honor of a reply, but no, it's just like if you type something in here interesting, I might just jump on it. Anyway, I think I'm close to the end. Whenever I go in here, I just scroll down through all of this, the color part, because that is the stuff I haven't looked at yet. Glamour's Glue. I'm pretty sure Glamour's Glue comes in here. So anyway, anyway, I won't keep doing that. You guys will be like, come on, Candace, get to the chat. Stop playing around in Blossom. But yeah, anyway, the last thing I guess on Blossom is, portfolio. So this here, guys, this is the 0 to 100K challenge portfolio. I do update it in Blossom. So I keep it all here for you guys. If you want to go in here and check it out, it's all here. It's all here. And I update it at least once a month. I should probably update it in between more often, but it is there. So if you ever want to go in and see what's going on with the challenge, it's there. Definitely worth it for sure. All right. let's see here. Nightbot. So we are 3 away from a show for tomorrow. Let's see. Rob is asking, what is Blossom? Perfect. So Blossom, like I said, Rob, we're just looking at it. It's this. It's this social media app here. It's designed, actually, the 2 guys who run it, Max and Brandon Beavis. So those are, you know, at least you probably, hopefully you've heard of Brandon Beavis. He's pretty big, one of the larger of the Canadian financial YouTubers. And he's actually been on the channel once. We did an interview with him on the channel. So yeah, anyway, check it out. Rob, come on over, follow me. Also, guys, you can direct message me here. I'm not going to click on my direct messages because, you know, I'm not going to share what you guys say to me off of the public side because, you know, it's personal. It's personal. Or, you know, it might be personal to you. So yeah, you can direct message me. And that's what, if you want me to look at your portfolio on a Sunday show, just direct message me. We'll talk and I'll just let you know which Sunday I'm going to fit you in. Obviously, it's first come, first serve. And, you know, not many people do it, but sometimes every so often there's somebody who's like, can you please just look at my portfolio? And I'm like, sure. Okay, Paul says, Mountain Finance trims your stocks. There we go. I love it. I love it. All right. Scott says, I'm on there, but it's not the same name. What's the advantage of an ETF that gives monthly dividends versus an ETF that gives only growth? Great question. I love it. All right. So basically, there's many, many, many investing styles. So here, actually, you know what? It's time. You guys know what it's time for. Oh, I got to go over here. Market close. Oh, there's the new background for the market close. But that's not where I want to go. I want to go to the whiteboard. All right. So, Rob, there's three basic styles. 3 basic styles. Of course, we have dividend growth. All right. So dividend growth is basically, those are your growth. That is your growth. So when you say what is an ETF that only gives growth, well, that's usually a dividend growth consider. Even though the word dividend is in it, a lot of times you hear it and you think, oh, that must mean you want all the dividends. Well, no. Dividend growth, your big goal is maximum. Here we go. Let's just do this here. Your big goal is basically you're looking for growth. So I'll say you're growth focused. That's kind of the big thing with a dividend growth stock. All right. Or ETF, or the overall style. Now, there's also growth income. All right. So growth income, and we'll come down here. Growth income tends to be total return focused. It's like, you know, you want income, yep, but you also want to have a bigger total return. So you're looking for both components, both growth and you're looking for income. So you're looking for both. And then the last one, and this one's easy. I just have to do this. Bang. Is your income investor. And your income investor is, well, let's just do that. They are income focused. Now, whoops. I did not mean to do it that way, but there we go. So they're more income focused. And we'll get rid of that. There we go. So what is the big difference? So in many ways, the middle one, growth income, is also sometimes referred to as, and we'll put this in here, hybrid. A lot of times it's referred to as a hybrid style because it's kind of like taking the best of dividend growth and income. So those are the three main ones, and there's probably some other things there. Like, we're not talking at all about any of the traders or anything like that. But in a nutshell, so somebody who has dividend growth, even though they're growth focused, a lot of times that's going to come right into this whole total return part. So, you know, I look at it this way. If I was doing dividend growth, my big goal would be ETFs or stocks that are going to pick up a lot of growth, and maybe they might have dividends. It really boils down to, because when you look at, and here I'm just gonna grab, let's grab these and let's just drag these down here for a moment. So I might look at a company that has, they could have, so I'll give you an example. Let's give you just a couple examples. And we'll go to the pen for this. We'll go to the pen. Let's go to the pen. All right, here we go. So you could have a company. Here we go. There we go. There we go. I got the pen. So let's say, for example, this company has a 25% growth just from share price. So we'll call that ROI. So your typical return on investment, if you get 25%, and then you have let's say they have a dividend of, let's say they have a 2% dividend. All right, so in this case here, their total return is more than likely going to be around 27%. Because you're adding the two together. So that's going to come in there together into your total return. So that would be a really good investment for somebody who is focused on that. In fact, that would also not be a bad investment for somebody who is in the hybrid either, because you are getting that big growth. Now, if you were to look at something like an ETF that has, let's just say it has a 5% ROI, but it's, it's got, you got that dividend trap, right? Let's say it has a 15% div. So a lot of people will look at this and, well, for this investor, here's the thing, that's a 20%. That's a 20% return on investment. So a lot of times this might be the better in here for you. Now, we're not going to do any calculations with, like, you could argue that, well, what if you put that 15% and reinvest it? Maybe that would knock that 20% up closer to 27. Sure, it might. It probably, in most likelihood, it probably would get you about 25, 26% in this scenario. But that dividend growth, obviously their idea is get as much growth, get as much total money as possible. They're not looking for having money come out, because normally your dividend growth focused, your dividend growth investor, those are people who have longer runways. So they have a lot of room to go because they might be young. Maybe they've just started investing. Maybe they've got 20 years. Maybe they got 30 years. Maybe they got 40 years until retirement. So they have room to ride out bear markets. They have room to, bear markets, love it. Dividend growth investors love it. Sure. Yeah, they're, everything goes in the red, but they're buying things nice and cheap, just stacking things. So that way there, when, you go into the next bull market, all of a sudden you've got some huge growth in there. All right. Now, with the next part, the growth income hybrid, you will find there's a couple ways you can do this. So you can sort of go with you can go fully ETF. You can do an ETF focused if you want, or you can do an ETF stock mix. Your goal in this case is, you're kind of like, if you think about it this way, and we're going to talk a little more about the income here in a second, but your goal is to try to get the best of this and the best of this. So you're looking for growth, and you're kind of putting more of a priority on getting that growth through growth and dividends. So you're trying to get the best of both worlds. Whereas income, and we're going to skip to income for a moment, you have that complete income. You're like, I'm okay with getting rid of a little bit of growth to get as much income as possible. So where would this be important? Well, let's say if you're retired. R-E-T-I-R. It's hard to write with a mouse, guys, but if you're retired. So let's say, for example, you got your TFSA maxed out with income ETFs. That's a whole bunch of tax-free income that is coming out. That's coming out of that ETF. And, it's not impacting your OAS. It's not impacting, if you're on GIC, it's not impacting that. It's not impacting your taxes. So that's kind of that whole thing. So when you look at it from that perspective, you can be like, oh, all right, that's why you don't care about the growth. You just want that income because you're living off of it. You're using that income to you know, basically to supplement your lifestyle. So this becomes kind of an interesting thing. So in my opinion, and this is kind of, now there are younger people who are entirely into this. They're like, I love getting these dividends, but I always look at it this way, is that, you know what? This part over here, you can still kind of get that best of both worlds, because, you know, you want the income, but you want them total returns. You want them numbers to get big. And that's kind of what you're getting at, you're getting with this one here. And I'm just going to put a little starburst around it of sorts. There we go. Yeah, starburst. Ironically, the funny thing is, guys, I could have just clicked on here and over here and gotten a starburst. Just look at this. I could have just done this. And I could have grabbed a little starburst here, and let's just send it behind it, and let's just make it smaller. So I could have just did that, but nonetheless. Whoops. There we go. Oh, well. So yeah, that's kind of the whole thing. So there are the three different ways. It's kind of funny too. There's also, I've noticed that sometimes you'll get a little bit of a war going between, you'll have people who are dividend growth investors saying, oh my God, I can't believe that the income investors are just, you know, throwing away money. But it's not really throwing away money, because, you know, you are enjoying that income and it is supplementing your lifestyle. So that's kind of that thing. So a lot of times when you look at age, oops, let's actually get back here to the pen. All right, so let's just say, put a little thing here. That's going to be retirement right there. And this will be, I don't know, 18. A lot of times you're going to start with dividend growth. You know, that will normally power you until about here. And then normally at this point you start going, and I'll just use the H for hybrid. You'll start going into the growth income. So, you know, and then over here it can be fully income. So this is a legitimate path. Now, I will also say this. Let me put it this way too. If you hit retirement, and let's say you're very well off, you've got great pensions, and you're getting more money coming in than you need, well, then you don't necessarily need income in that case. In that case, you might want to stay dividend growth if your main goal is simply to grow as much as you can for the next generation. So for your heirs. That would be another, once again, that would be another very viable way to go. All right, anyway, tangent time, huh? All right, let's get back here. Larry says, big video going around. Kim Jong-un is now forklift certified. Wow, that's hilarious. Mark says, I owe my 2025 performance to Candace. Oh, well, thank you, Mark. Thank you. I do what I can do. And Scott says, but you can also refer to hybrid as a pure growth stock and a pure income stock as part of your portfolio. No, you could. I mean, that's the thing. With a hybrid, there's no hard and fast rules. You know, like you can do it entirely, like I said, you can do it entirely with ETFs. So, you know, ETFs that are growing and giving income, or you could just have half of your portfolio pure income, half of your portfolio pure growth. Still, you get the same kind of idea. It really boils down. So, you know, I always look at it this way, like there are going to be, there's going to be opportunities that come along. So let's say, for example, when NVIDIA came along, and if you had the foresight to see where NVIDIA was going to go, it doesn't matter what type of investor you are. I think a position in them, if you got in early, would have been a really good move. So, you know, you will get a little bit of overlap. There's no hard and fast rule to say that if you're a hybrid investor, you have to have 50% this, 50% this. It can change. It can change. It's just more or less a style. Think of it as a style. So if you think about it this way, you know, think of clothes. You know, everybody has their own sort of clothing style. Like, Maybe you're down to the earth farmer type style, but occasionally you might throw a suit on. It's kind of like that. You can mix and match. You can create your own style if you really want to. But those are the three main. But you can create a hybrid of a hybrid and a growth, or do whatever you want, guys. It just needs to make sense for you, and it has to fit, well, a few things. It has to fit your risk profile, and obviously in the end, it needs to be meeting your needs as an investor. If whatever style you take, if it's not meeting your needs, you need to maybe reevaluate the style. Now, mind you, if you're going into a bear market, most styles are not going to be meeting your needs because, well, unless you're looking at the big picture, right? If you're looking at the big picture and you're thinking, okay, we're heading into a bear market, time to start buying like crazy. So yeah, absolutely. Let's see here. Scott says your 15 plus 5% example with reinvestment is why I think Adriano is a bit nuts for going all in on his covered call ETFs. Yeah, I mean, Adriano takes a pure income investing thing. I don't. Like I said, I'm in the hybrid zone. Is there overlap? Sure, absolutely. But the math has to make sense. And that's, for me, the math is always kind of like that bottom, I guess the bottom level of my investing reality is, does it mathematically make sense? If it doesn't, well, then I don't want anything to do with it. I look at it that way. Rob says, so in bear markets, the ETF that gives dividend is superior to an ETF that gives no dividend. Gotcha, right. Well, I don't want to say that they're superior. They both have their own function. It really depends. So look at it this way. If you're going into a bear market, all right, here's our bear market. So if you've got a dividend growth, so let's use, you know what? We'll use a VFV as an example. All right, let me show you what happened to VFV in the last bear market. And here is, and this I think will help make it a little bit clearer. VFV. And the reason I choose VFV is that well, you know what? It's an S&P 500 index. It very much tracks what the market overall has done. We'll go out to 10 years. All right, this here is the bear market right here, the last one. You can see this right in here, this big slope in here. So here's the beauty. When you're going in, yes, on your way down, you're not getting a lot of dividends. Things are looking red in your portfolio. But if you're buying this, so look at this. At this point, at the lowest part of the bear market, if you were buying it, you would have been paying, well, on this day here, the lowest was 83.77. And look at where it's at right now, 170.17. That's a lot. So if you actually did the total return on that over that amount of time, there's not many dividend ETFs that would have given you a bigger total return than what you get there. There may not even be any. But I'm just saying you have to sort of look at it that way, because look at it. I mean, from here to here, that's a lot of growth. That's a lot of growth. That's quite the slope. So, it comes down to functionality. That's kind of the point I'm getting to, Rob. It's functionality. So if you have that long runway. So Rob, let's say, I don't know how old you are, Rob, but if you were, let's say you're 30 and you're not going to retire till you're 60 or 65, we'll say 60 just because, you're ambitious. You want to retire young, enjoy life a bit more. You've got 30 years. In 30 years, you're going to make more money with something like this than you're going to make with a covered call. That's the truth. That is the reality of it. Now, you can get close with covered calls if you are reinvesting. So if you had a covered call version of this, but you're reinvesting those dividends, yes, you'll get closer. You won't get all the way there, but you are enjoying, at least you're enjoying dividends, and you're reinvesting them. So it really boils down to, and some people will need that psychological boost. Like we heard today, people saying, oh my God, I got that email saying, you got dividends. And that was great. Some people need that. And that's always fun too. But keep in mind, doesn't matter how big the dividends are, you still get the email, right? You'll still get the email even if it's only, like take a look here, you're looking at less than 1%, so 0.898%. And also this one is quarterly too. So you get it every once a quarter, you get that little, you get dividends email. So yeah, the whole idea with investing though is that you want to find something that suits your style. And when you're looking at your style, your age is going to definitely be a big factor. And honestly, yeah, a dividend growth stock, if you're young, is, in my opinion, the best way to go. But you do have, there are a lot of pure income people in the younger ages too. I think I could beat them. I think I could beat them with a dividend growth stock though. If we did like a 40-year race, I think I would win. But like I said, there's no right or wrong answers. There's only, well, you guys know what I'm about to say. There's only math. Go with the math. That's what I always say. Look, and this is the thing though. Here's a fun thing, Rob. I mean, you don't have to. You can always run little experiments. Like for example, if you, you don't have to even buy. You could do paper trading. You could take two different portfolios. You could run a paper simulation on it and say, okay, which of these would make me the most money? And then you could run it and you could do the math, do the calculations, take a look, and you'll get your answers. All right. Brian says, I'm mostly income focused, partially because I am 66 and I am only adding my OAS to my portfolio. My portfolio is still too small. I buy more shares of dividend ETFs with my dividends for money later. Okay, yeah. And that's, Brian is in that age group where, a lot of times you do, the income makes a lot more sense. Scott says companies can cut dividends in a bear market. The way to protect yourself in a bear market is with a cash wedge. Yeah, I mean, definitely, bear markets, and it depends on the bear market. Some bear markets aren't that bad. Like the last bear market was not that bad. Were there dividend cuts? Yeah, there were some, but not that many. Actually, I would say the last bear market was pretty mild. So we'll have to see. And I honestly don't think we're going to get another bear market, at least in 2026. So Rob says, so what's a great hybrid ETF that makes the best of both worlds? Growth in share prices and dividends. You know what, Rob? I'll tell you right now. Watch tomorrow's video. That's exactly, there's 5 of them in that video. But, that's the whole thing. And I've got a lot of hybrid content on the channel. Just give it all a watch. Give it all a watch. But then still make up your own mind, right? Don't just take what I've done and say, all right, I'm just going to copy what Candace is doing. Don't do that. Just do what makes sense to you. Do your research. Do your math. Never, I love this saying is, never just trust some random stranger on YouTube, even though, heck, even though it probably feels like me because we've been, I've been talking to you probably for a long time now. It feels like every day. And that's cool. That's cool. But it's your money. You worked hard for your money. So it's worth taking the time to do your own due diligence. It really, really is. Brian says, okay, clue me in, Scott. I am on the north side of 401 from you. What is a cash wedge? All right. And Rory says, I've switched more into monthly payers now than I do quarterly. Yeah, a lot of people like the monthly payers. Yeah, absolutely. Scott says, I'm setting aside a few years of what you'll need into something like a GIC or money market ETF in your RRIF. And that's basically he's talking about a cash position. And there's many ways you can do it. So a GIC, they're nice if you can get in when the interest rates are high, because then you can lock in some money with a pretty good interest rate. Now, the interest rates on the GICs, they've come down quite a bit with the rate cuts. There's also, he's talking about a money market ETF. There's also cash ETFs out there as well. I'm going to do a cash ETF video fairly soon. Because it's always good to have a little bit of a cash reserve. And there's many reasons to have a cash reserve. One of them is that emergency fund. So a lot of people, don't have an emergency fund. Because, typically an emergency fund, it's usually, you've usually got a few thousand at least. Well, nowadays, it used to be a couple thousand bare minimum, but I would say 3,000 now because after inflation. So you want basically enough money to at least live off of for an entire month, if not 2 months, before, just so that way there you can get yourself resituated after, if you lost your job, for example, all of that fun stuff. So there's definitely things out there. An emergency fund, one of the things I do like now is I love a cash ETF for your emergency fund for one reason. You have complete liquidity, so you can get access to it right away. Well, as long as the market's open. But you are also earning at least a little bit of money. You're not earning a lot, but you're earning a lot more than you're earning in most savings accounts for sure. Like a lot of times you're earning like 2 to 3% depending on the cash ETF. All right, Brian says, okay, so my total portfolio needs to be converted to cash. Doorpat says, why does Broadcom keep falling? Well, for today, I mean, we got a little bit of a down momentum in tech overall, so that's more than likely. But as we were looking at it earlier, I think we're getting pretty close to a bottom for Broadcom. So I'm hoping to see some movement back to the upside. Scott, in the case, we're probably better off just doing income. Brian says, closing your company in March as we are not making money after 21 years in business. I'm starting a part-time company and hoping to add as I can to my TFSA until I eventually retire. Nice. VFE is a zero commission purchase at TD now. Nice, that's good. Brian says, a year ago we took 1/3 of our salary and still lost 36K overall. Went from 6 employees to none, and just my partner and I working now. It doesn't carry the overhead. Scott, there are tax and retirement saving advantages to starting a corporation. Absolutely. Rob says, is right now today the right day to be rebalancing my portfolio in terms of getting in at the bottom of the market, or are we at the top of the market? That's one of those interesting things, but look at this. Once again, I just want to look at this for a second. This here, VFE. People are asking questions. Is this the top of the market? Well, it feels like the top of the market when you go into this little, well, this here's the pandemic. So yeah, in many senses, I don't think it really matters, to be honest, on a longer scale. And once again, this also has to do with how much time you have. If you're young, just dollar cost average. Dollar cost average. So buying an asset at a regular interval on a regular schedule, that will normally get you more than trying to sort of time the market. So that is something I always do. I like dollar cost averaging, and I use a bit of a hybrid. So I will dollar cost average, but if I do see a big correction happen, so like for example the pandemic or Liberation Day, if I do have some cash aside, and this is where that cash wedge that Rob was talking about, or sorry, that Scott was talking about, yeah, I'll pull out of that just so that I can buy and get in at some of the things that happened, because then you get some really good deals. So, for the most part, dollar cost averaging is the best way to go. Brian says, I incorporated our last company. I'll wait and see if the income justifies the expenses of incorporation later. Bookkeeper, accountant. Fun. All right. All right. Davey says, or Dave D, I love reinvesting dividends because it makes me feel like I'm playing with house money. Yeah, it can, but keep in mind, guys, those dividends are your money. Yes, you worked hard for the money that made them, but they're still your money for sure. But yeah, it does feel good. It feels fun because it's like, yeah, it's not coming directly out of my pocket. Wow. Paul, portfolio makeup for growth, Tesla, 82% for RRIF income with a bit left over. Harvest, Tesla, 10% for crypto with income, but dripping blocks, 8%. Yes, I know eventually I need to lower that. Tesla at 82%. All right. Satyaki says, and I think I may have crucified your name, Sat. Thoughts on the Supreme Court judgment tomorrow? Do you think it's bullish for the market overall? Thanks. Hard to say. It's hard to say. I'm gonna. I think I'll play it by ear. I'll sort of watch, see what comes out of it, and we'll see. Now, I don't know if we have a show tomorrow or not, but if we do, we'll, that might be the topic. Regarding the tariff issue. Yeah. So basically, in a nutshell, guys, they're going to rule on whether or not the tariffs are legal. So one thing to keep in mind, though, is that, who appointed a lot of the people on the Supreme Court right now? I'll give you a hint. Yeah, it was Donald Trump. There's your hint. Rob says they should make the bear extinct so that we don't have a bear market. There we go. They might have to refund, right? That would be interesting. If they declare it's illegal, I don't know if that would... Well, keep in mind, though, too, the people who paid the tariffs are Americans. So I don't know. I don't think that would happen. But we'll see. We'll see. On the bright side, if it's the Supreme Court, you don't really have any more... you don't really have another appeal at that point. Paul says I have a good DB pension, work part-time, wife has a pension, so RRIF income is just to start a drawdown at 3.13% this year. I think companies will need to sue to get the tariff money back. That's why Walmart started a lawsuit. Yeah, pretty much. And good luck with that. Good luck with that. It can be a mess. I think it can be a mess. Larry says, trying to figure out how to make money off of Iran. They are out of water and have to abandon cities. Violent protests are going on and the military is being attacked. Oh, that's a good question. I can't think of any way, like off the top of my head. All right. And the Financial Express is still active. We're still 3 away if you guys want a show for tomorrow. And time is running out. Time is running out. Normally we go about an hour and a half. So you guys got about 8 minutes. Now, if we do not have a show tomorrow, then we're going to go back to our normal schedule. So the normal schedule, for those of you who are new to the channel, is we normally have a This Week on Sundays, which we still have. And we do a market close on Wednesdays with an option to add one for a Friday. Because it is nice to have one on Friday just because, we close out the week, all of that fun stuff. But yeah, you'll see a lot less of me again. Let's see here. Larry says, need to figure out if Israeli desalination machines are from a publicly traded company. Interesting. And Paul says, don't trust that random YouTube channel, but YouTube Invest Answers has helped compared to dividend stocks rock service. There we go. And Scott says, interesting about no fee at TD for VFV. Scotia is no fee on all Vanguard. Yeah, my understanding, isn't iScotia fee-free for all ETFs, or is it not all ETFs? Paul says, since I started collecting the DB pension August 1st, 2023, we can income split and pay so much less taxes. Income splitting is a way to go, absolutely. And very quickly, guys, we got a super in from Sky, a $1.39 super sticker, and that is GOAT number 2 of the day. So we have we got a GOAT sighting, That's 2 in there. So we are 2 away. So either 2 supers or 2 gifted subs away from a show tomorrow. And we still got, we got at least 6 minutes left. All right. Patricia is in the house with a hi. And Sad is saying, all good. I guess with the pronunciation, yeah, absolutely. Kelly is in the house. I stopped automatically reinvesting and started using the pot of dividends each week on a single stock of the week. It feels like I get more that way. Not a bad plan. Not a bad plan. So I don't like to... the only way I'm going to drip is if I had if I got a discount, like if I could get more if I dripped, then I might consider it. But I like, sort of taking my dividend money and putting it in something that I'm under-diversified in. Mike Western is in the house with a hello all. Hey, Mike, how are you? All right, let's see. News. XAI just unveiled the 800,000 square foot building that will house the company's multi-billion-dollar next generation Colossus 3 data center. It will be the largest supercomputer in the world. Oh boy, that could be interesting. That could be interesting. Holy cow. Yeah, I mean AI. Like if you guys have been following CES, AI is getting pretty darn crazy for sure. So definitely something to be paying attention to. Okay, Scott says no. Under a certain amount at iTrade, it's $9.99. Then it bumps down to $6.99 if you hit a number of trades or go over the invested amount. I thought I read somewheres that it was free if it was an ETF. I thought it was a free ETF. So well. Oh boy, whole bunch of action at the last minute. Janet Lynn in here with a $3 super sticker. All right, guys, that is goat number 3. And thank you very much, Janet, Janet Lynn. Some people like just Janet, and some people are like, no, my name is Janet Lynn. Oh, the whole thing, please. You'll have to let me know. You'll have to let me know. I'll remember. I'll remember. And then Dorpat comes in with a let's make that show happen tomorrow. And that is the one, Dorpat, that's the one that did unlock tomorrow's show. So Friday is a go. And that's our 4th goat. Now, we haven't stopped. We haven't stopped there. We also have a gifted sub. Brian has gifted a Mountain Finance membership. I don't know who it went to because for some reason my side monitor is off. It went off on me. But that means, guys, Brian has unlocked today our Flash Dance goat. Here we go. I can just hear the music in the background in my head. So the Flash. You know what? That one's good. We'll do it twice. We'll just do it twice because I want to. Why not? There we go. And I don't know if you guys read, but the shirt on the goat says pump it. And we're talking the market. We're talking the market. So there we go. We have seen everything. Well, we haven't seen the secret goat, but you guys will figure out one of these days how to unlock that goat. Scott says congrats, Brian. And there we go. Flash dance goat. Paul says breaking. President Trump orders the U.S. government to buy $200 billion in mortgage bonds to drive mortgage rates down. We are bringing back the American dream, Trump says. Okay. Boy, now we'll see if they actually do it, though. I mean, Trump orders a lot of things that don't happen, too. Brian won. Janet is fine. Thanks for all the info. Okay, there we go. Nice to meet you, Janet. Paul says, oops, Delon. There we go. Nice. All right, guys, if you got your last minute questions, we are at that 1 hour, 30-minute mark. But if you got your last minute questions, get them on in. We'll go big. We'll go big. Everything is messed up here today, guys. So you can see the whole studio. I don't know. I have a control normally on the top of my screen that lets me zoom in and out my camera. And right now it's just got it stuck in zoomed out modem, in zoomed out mode. So you're able to see the whole studio, the cat tower, the lights, the wall of Lego over there, all of that fun stuff. Oh boy. Scott says Congress controls the purse strings, so Trump can order all the spending he wants. Yeah, it'll still have to go through Congress. And the rate things are going in November, oh boy, I can almost sense a blue wave coming to the U.S. Congress. So we'll have to see how that all goes, though. And that'll be fun. That'll absolutely be fun for sure. Oh, this coffee is so good. Very, very, very good. So guys, yeah, we are going to be back here tomorrow. We got a market close tomorrow, 3:30 p.m. as normal. Also tomorrow at 2 p.m. And that's when the next video drops. Oh, Nightbot. Nightbot, I got to turn you off. You're not the Nightbot's normally turned off by now, but you guys, today was like last minute. Let's get in here. Dorpat, maybe have a chat with ChatGPT later to figure out what happened to your camera button. I might have to. I think if I reboot my phone, I think because basically my phone is set up to be a virtual webcam. So I think that's what's going on. Xenio, thoughts on INTY? Would it be worth waiting until then to add new money into the TFSA? All right. So INTI, that of course is the new Evolve ETF that's supposed to start trading on the 15th. So it is one of their ultra max, so their ultra yield, sorry, let's not use max, ultra yield ETFs. So it'll have semi-monthly dividends. It will be investing in big international companies. Now, here will be the question. I'd love to see everything it's holding. You know, will they include Canada and the United States in that, or will it just be Europe and Asia and maybe Australia? So that'll be an interesting thing to see. But yeah, this will be going on the 15th. So right now we don't have a lot of information on INTI, but gosh, that would be really, really cool. What coffee do you buy? I buy Maxwell House Instant. I am not, and this, guys, please don't, please don't think I'm weird, but I just don't really like brewed coffee. I guess when I actually, funny thing is, I never drank coffee until university. And in university, I just, my family used instant Maxwell House. So that's what I used. So, that's the taste I like. Most other coffee, I find it kind of disgusting, but this I find really, really good. So, lifetime Maxwell House instant coffee fan for sure. Paul says, "Wow, you were zoomed all the way out. We see the we see the Lego on the right, a bright light." I know, I know. And normally I zoom in, like because I like to have that the Mountain Finance up in the top corner. So yeah, my zoom controls are just gone. They're gone. I quite literally spent 15 minutes troubleshooting before the show started. Brian says, yeah. Oh, you can also see the full shirt. Inti. Sorry, not Inti. The full shirt. Holy banana bread. Bismarcky, I hope Inti does not include Canada or the US. We already have easy exposure to those markets. That's what I'm hoping. I'm hoping that Bismarcky. That's where I'm hoping it goes. Mark. There we go, Mark. See now? We're coffee buds. We're coffee buds. Maxwell Instant, me too. True, says Brian. All right, guys. So, guys, we are at that time. Another fantastic show. Hopefully tomorrow I can get the Zoom problem fixed and we'll get it all back to normal. But you got to see the Lego wall and you got to see the cat tower and all that fun stuff. Only there was a cat in it today. But guys, we'll be back here again tomorrow. We'll do this all over again. We'll close out the weekend, see what the market brings. Until then, though, guys, I do have one more thing to say. And, well, that's